Central bank gold purchases slightly lower in Q2 2023, but overall net positive. Welcome to the mining news on Commodity TV. The environment for rising gold prices is slowly improving. In combination with healthy investment demand and jewelry demand in conjunction with central bank purchases create a good environment for gold prices to rise soon, hopefully. We suffered a lot. Gold demand in Q2 excluding OTC fell slightly by 2% to 921 tons, which came from somewhat slower central bank demand. Including OTC and inventory changes, total demand rose 7% on an annual basis to 1,255 tons gold. Only Turkey sold due to local problems. Net purchases in the official sector were 103 tons, underlining the positive trend of central banks. Jewelry demand increased by 3% to 476 tons. Bars and coins are up 6% to 277 tons, and ETFs lost only 21 tons. On the other hand, OTC demand jumped sharply to 335 tons in Q2. Total supply increased 7% to 1,255 tons, and mine production is on track for a record 1,781 tons in the first half of 2023. For future production, Karora Resources again reported very good infill drill results from Fletcher South at the Beta Hunt mine. The 9-hole program showed great results in the first 4 holes with 2.8 grams gold over 52 meters, 11.8 grams gold over 2.9 meters, 3.3 grams gold per ton over 9 meters and 2.5 grams gold over 10.5 meters. Also one result showed 4.7 grams gold per ton over 11 meters. Fantastic. Strong results with strong gold mineralization over very long intervals. This is what we want to see. We love it. Also, they determined new parallel mineralized layers in the footwall of Fletcher. Great job, and so the mine life keeps extending despite mining. The stock is undervalued and invites really to buy. Caledonia Mining delivered mixed figures for the quarter and half year. Gross revenue was 37 million and there was a gross profit of $10.9 million in Q2 2023. While the Blanket mine contributed $13.1 million, the group's gross profit was impacted by stripping costs at the Bilboes oxide operation, notwithstanding a small revenue contribution of $2.2 million in the quarter. Bilboes will be returned to care and maintenance effective 1st October this year, and pending completion of the feasibility study for the sulfide project, the remaining oxides will be mined as part of the larger project. Mining-related costs per ounce for the quarter of $1,084 per ounce included Bilboes oxide operating costs. At Blanket, mining-related costs per ounce were $915. This increase was largely due to disappointing production performance in the quarter. However, production issues appear to have been resolved as July 2023 showed a significant improvement in production and costs. And one thing we know for sure, when there's a problem, Caledonia gets it solved. That was the thing in the past, and I'm sure they do it the same way. AIC were $1,357 per ounce. The company incurred a foreign exchange loss of $3.6 million in the quarter due to the significant depreciation of the RTGS dollar against the US dollar in June 2023. This impacted operating profit, and accordingly IFRS basic earnings per share showed a loss of 0.6 cents. IFRS EPS reflects the development of IFRS earnings attributable to shareholders and the impact of the issuance of new shares. Adjusted earnings per share of 10 cents is adjusted for realized and unrealized foreign exchange losses, impairments and fair value adjustments. I think this is important to know. A dividend of 14 cents per share was paid in April and another one in July this year, which I love as a shareholder. Quarterly dividends, and they keep on moving. Net cash and cash equivalents were negative $2.9 million at the end of the quarter. But, however, improved quarter and operating performance resulted in July cash inflows from operations before changes in working capital, meaning revenue less at mine costs of $7.7 million. The Blanket mine produced 17,436 ounces gold in Q2. The Bilboes oxide operation produced 1,076 ounces of gold in the quarter. The weak numbers should now include all problems because in July they already produced again over 7,800 ounces gold for Blanket. That means they are really back on track, and the drilling campaign showed very good results. At this price level, Caledonia is a bargain and the dividend will continue to be paid quarterly. We expect the company to produce almost 80,000 ounces of gold again in 2023, and we see AIC of $1,100 to $1,200 per ounce gold for the full year. We also think that the further deep drilling will lead to good results and thus also to an upgrade of the inferred mineral resources, which will of course enhance the mine life. You can also find all information on our Commodity TV app in German and English. Please note the following disclaimer. And of course, we appreciate a like and, more importantly, subscribe to our TV channel on YouTube or on our Commodity TV and rohstofftv.com. The stocks discussed are part of the SRC Mining Special Situations Certificate, and of course, I am a shareholder in the companies. Thanks for watching us, and bye-bye from Austria.